Whenever you're investing, think about taking a voyage on a ship. Are you going to bet on the captain? Are you going to bet on the boat? Or are you going to bet on the ocean? The way I can describe that is if you're investing in, let's say, a house, that house is the captain. You're betting on that house to make money. If you're betting on Des Moines, you're betting on the ship because Des Moines is going to continue to do hopefully well. If you're betting on the ocean, you're betting on the USA, just doing really, really good as well. A lot of times, out-of-state investors are coming to us in Iowa and saying, we're betting on Iowa, we're betting on Des Moines, to Debbie's point as well. Maybe they're betting on the ship, not necessarily betting on just that one deal, that one thing to make them money.
Most valuable things that a commercial agent can do during the buyer's process.
There are a lot of ins and outs, but then also what's happened with recent properties where you're going through everything that has sold on the market, what price it sold for, who bought it. Maybe you can see that, there are certain companies making larger moves in an area development-wise. Let's say you're looking for multifamily and you just found out that Waukees building Target with a big development around it and they're almost done with the Live Nation.
We're gonna go, I'll grill them with questions and then we'll do Q&A so that you guys can bring questions too. I think it's really important to involve the crowd of just, what are you guys thinking in your head, because someone else has that question that these guys can answer and they will tell you why they are qualified to answer that question. So Dan, 2 to 5 minutes, like where you started, where you're at, what you do, and Jared the same.
Dan Dempsey, I'm a commercial agent at NAI Iowa Realty Commercial. Actually kind of newer in the commercial real estate space. I'm in my second year. Been investing myself and with my wife since 2013, had kind of our own portfolio. I was actually a police officer prior life to this, and it got to the point where I was kind of fed up with that job and real estate was taking off, so I went full-time into real estate and went for it. I like to focus on multifamily, although kind of found myself being a generalist, doing all sorts of stuff, leasing. Honestly, lately I've found a decent amount of hospitality properties, which has been kind of interesting. What's my personal portfolio and properties that we've owned? Started off with a duplex by accident, probably pretty similar to a lot of folks. I was also in the Marine Corps, so maybe not the smartest guy out there, but eventually I caught on that it was making money. And then, kind of asked my wife, hey, like, would another one make money? And, we went through that process and it did. Luckily, we went from that all the way up to now we've got 30 units, 24 unit apartment complex, and then a handful of single family and duplexes as well. Haven't really got off into any other commercial areas, although kind of thinking about it now. We do have some furnished rentals, but generally like to stay towards the midterm rentals with, traveling nurses, traveling professionals, not Airbnb. Haven't bridged that one yet.
So Jared Huseman here. I read Rich Dad Poor Dad in 2006. So that would have been, I don't know, what is that, 17 years ago, 16 years ago, I don't know what that is. Been investing since 2009, so that's been 14 years now. I spent my first 6-7 years doing what everybody's room did, house flipping, contract sales, rentals. My first house was a $12,000 investment in Oxford Junction, Iowa. If anyone knows where that's at, raise your hand. Good, because you cannot find it. In fact, that house is now a vacant lot because it got bulldozed because I let it go to tax sale. After about 6-7 years of my brother and I doing fix and flips and rentals, one day we sat down and looked at how much we were actually making in profit. And despite what all those TV shows show you about flipping houses, you don't make as much as they tell you. By the time you pay all the fees and this Uncle Sam guy, and then you're a real estate agent, thank us, so up here, who makes all the money? It was like, wow, this is actually kind of sucky. And what we realized was residential real estate is a very long-term game. If we wanted to own those properties for 15, 20 years, then it would have been fantastic. But in that 6-7 year period, it was like, wow, we're making less than minimum wage. This really does suck. So I said, well, who's making all the money? And I was like, well, those agents. That's making all the money. So I was like, I'm gonna become an agent. So I became an agent. I specialize in multifamily sales across the state of Iowa. I can get you any stat you want pretty much about multifamily and apartments. And then when we sold our portfolio off, it was something like, I don't really know, 60, 70 units. I don't really remember because it was a long time ago and you kind of lose track. Me and Chad were discussing that earlier. Now I own commercial, I own medical office, I own industrial. I love industrial, my favorite. And then I've, again, done pretty much everything at some point in time. Done contracts, rentals. Short-term rentals weren't around when I was investing, so that's a whole new concept I have no idea on. But pretty much anything else I can tell you how to do it or how not to do it, because I probably made more mistakes than probably at least half this room combined. Maybe not, I don't know, but I've made a lot of mistakes.
So first question I'm gonna hit you guys off with is Dan, give us like the kind of cliff notes of when we say commercial real estate. I didn't realize this until I became a residential agent. Like there's so many facets of residential agent where like you can get into different niches. Commercial agent, same thing. Give us kind of the 101 of the different types of commercial deals, and do agents do all of them? Or do they kind of niche down, or like how can people benefit from that?
Question was basically kind of what are the different aspects of commercial real estate. Kind of the biggest, you're gonna have multifamily, 5 or more apartments. You're gonna have industrial, warehouse, industrial flex could be part of that. You know, if you're gonna have some showroom space in your warehouse as well. Retail is gonna be most of your shopping, QSR, fast food, that kind of stuff. And then you've got office, which is pretty self-explanatory, I think, for most folks. Besides the sale and purchase, then you're also gonna have leasing, where you can landlord rep or tenant rep on that. Buying, selling, and leasing out, I guess, for folks. And that's mainly it. There's some subcategories in that. I feel like most folks at least in Iowa, maybe Des Moines, are probably kind of a generalist, but have a main area of focus. The market isn't necessarily Dallas or Chicago or one of the big cities where you could just do one and maybe have enough market share where that's all you do. There are some folks that, that is kind of what they've gotten to, but that's generally over decades of experience in building up their client base.
Yeah, just to pivot off that, one thing we did touch on was land. You have commercial land is quite a bit, large acreages, land development, another big one. Also hotels, hospitality, which was kind of the first one before. There's a thing called Airbnb. There's actually these things called hotels as well. Just FYI, like Airbnb is not new, guys. It's just a hotel done differently. Uber is just copying taxis. As you get into the main 5 areas, multifamily, retail, office, industrial, hospitality, maybe a 6th as land. You can get even more niche than that. You mentioned QSR, which is quick service restaurant. That's McDonald's, that's all the fast food. You can do big box retail, thinking Hobby Lobby, Walmart. You can get into retail pad sites. You can get into neighborhood retail. You can get into neighborhood retail leasing, office space. You can control your front door office space to traditional office space in high rise versus suburban. You can get really, really niche as you get down. When you get into the big cities like Chicago, Dallas, LA, New York, there are agents who specialize in such a fine category that they might know the entire office building on 3 blocks of Manhattan. And that's all they know. They can tell you nothing else except those 3 blocks of office buildings in Manhattan. It can get as niche as that, and it can get as broad as we do everything, and it really depends on the market. Generally speaking, it's like anything you do here. The more specialized you get, usually the more money you make as you get these bigger markets.
Jared, I'm gonna ask you the question, like clients that you have come in, you guys both mentioned a variety of different types of investments. The clients you have invest in each of them, what are they going to be thinking of in the next 1 year, 5 years, 10 years, 15 years, based on what you know from your clients? How do they get to you by, they just won the lottery and they have a bunch of money and they're gonna buy commercial? Or do they build up from somewhere? And what did they build up from? How do they do it? How can you provide value to the folks here that, like myself, I own 7 units. What could that look like in the next 5 years? And then what do they do to get there?
Sure. A lot of my clients right now, in fact, I can do some stats on here, but the last quarter from April, May, June, we had about 11 transactions on multifamily in the city of Des Moines or the suburbs. 9 of those 11 were out-of-state investors. 2 were local. I know most of those groups there. Many of the investment groups, at least I work with, if they're investment grade, which is different than leasing, because we mentioned leasing as well, If they're investors, they are 1031. They made their money in other markets. They made their money by flipping houses, owning apartments. They might have also been successful business owners who are looking to offset their capital gains or taxes. We can go on a little later on, or high net worth earners of some kind. But generally speaking, commercial real estate takes 20% down to commercial real estate. And the average transaction of Des Moines, if you look at the last 12 years, was 1.25 million, $240,000 down. It takes some capital to play in that market. What I can say, this might be helpful for some people in the room though, in talking to the clients I have out of state about why they are investing in Des Moines, when we all are like, holy crap, prices are really, really high. And we need to look at, we also discuss a lot too, is that are the out-of-state investors, when they're buying our market, are they smarter than us or dumber than us? And that's a question we need to ask ourselves as we think about it here, because in some ways they could be smarter because they might see trends that we may not see, or they might see something that we don't because they're looking at all other markets across the country. The question I would always tell anybody in this room, whenever you're investing, think about taking a voyage on a ship. Are you going to bet on the captain? Are you going to bet on the boat? Or are you going to bet on the ocean? The way I can describe that is if you're investing in, let's say, a house, that house is the captain. You're betting on that house to make money. If you're betting on Des Moines, you're betting on the ship because Des Moines is going to continue to do hopefully well. If you're betting on the ocean, you're betting on the USA, just doing really, really good as well. A lot of times these out-of-state investors are coming to us in Iowa and saying, we're betting on Iowa, we're betting on Des Moines, to Debbie's point as well. Maybe they're betting on the ship, not necessarily betting on just that one deal, that one thing to make them money. Whenever you're investing, just think to yourselves, am I investing in this deal? Am I investing in the market? Or am I investing in the overall market? Because those are three very different strategies. And neither one's right or wrong. When you're a new investor, usually you're trying to bet on that deal because you need the money, because you cannot afford to lose money. However, some of these guys who are coming to our market are saying, I cannot lose money. I've already made the money, so I want to bet on a little appreciation, or I want to bet on quote unquote the US of A because I don't want to lose money in China, Argentina, Venezuela, whatever it is, and that's going to drive them to the primary markets, secondary markets, and to us tertiary markets as well.
Not to disagree with anything Jared said, but also on there, I feel like commercial real estate, I think, kind of gets this aura of it that it's some crazy difficult beast that people can't get involved in, or it's like a next level thing. And generally, it could be your first property even, but most of the time it's a second or subsequent property. Somebody's bought a house or a duplex and then they've been successful and are looking to continue to grow. So there is the ability, if you rented a house out and then you wanted to get a commercial flex, warehouse space, you can get those for $200,000. It's not crazy, but you're starting to venture into a different asset class, which could take you, down the path in the commercial world instead of housing. Same thing, you're not going to get the highest quality, maybe not a Class A, best neighborhood, but you could get a strip mall with, 3 tenants, and then you're working on whether it's office, retail, getting those businesses in there, leasing. You honestly don't even need to hire anybody probably to do your management at that point. You could do that yourself, and then you're gaining a ton of knowledge. That would be a client that I have, but also I think would be really appropriate for this room. You get on LoopNet, the first one that pops up, because it's a paid advertisement if you didn't know, is going to be that $20 million apartment complex or something. There's plenty of stuff out there that is attainable in the commercial world.
While I said that 1.25 million was the average, there are plenty of deals out there. You can do a small retail deal or office deal, you said a flex deal for a couple $100,000 and still do really well. The one thing I would say from a commercial standpoint, we discussed this earlier before we got started, the reason I like to invest in commercial more than houses and apartments, just simple theory is this. The easier it is to understand something, the more competition there will be. Typically there's an aura, like you said, about commercial real estate, oh my God, it's so scary, it's so big, it's so this, it's so that. Okay, good. That means it scares everybody else off. So my competition is naturally less when I want to invest. So everybody thinks commercial real estate is like this big scary thing. You can get better deals in commercial real estate sometimes than you can in residential and houses. I can guarantee right now you can get a 20 cap on an office building. Now, that's if you want to invest on office, which is a whole nother conversation. Yeah, right, a whole other question point. But the point becomes, office space might sound really crazy, but if I'm a niche, if I'm specialist, and I know office buildings on Hickman Road from 58th Street to 86th Street, and I know every tenant there, I know who all the businesses are, and I'm well tied to that community, that could be a really good investment if I know that community really, really well. And I can make really good returns on buying office building on Hickman Road from 58th Street to 86th Street. And I say that because it's a very specific thing we can all think about and picture in our heads. To your point, you can start in commercial real estate, less amount, and you can actually make more money in it, in my opinion, because there's less people that have the cojones to jump into it.
Do you think that that's like they don't have the knowledge or they're scared, or the capital to invest is too much? There's double limiting factors there.
I had a client about a year and a half ago, and I say this, the reason I said office space on 50th to 86th Street is because I had a client looking at an office building for $150,000, I think. And the owner was gonna carry on contract, like 30% even too. And it never ended up happening because the building was like half vacant. But again, $150,000, you can get these deals all day long. You just have to understand the market and understand, because you're not going to have the simplicity of leasing to, hey, I can just drop the rents and rent anybody, or I'm just going to screen the tenant. Like, there's a different risk factor renting to a business as opposed to a regular person. And you have to understand also what lease rates are, gross rent, modified gross, triple net, pass-through costs, all different things that come with that. You can get into it for less money as well. It doesn't necessarily mean a money. It's just a different vocabulary. That's the word I'm saying. I think you can probably agree with that too.
Next question would be cap rates. Everyone talks about cap rates. I even have people that call me as to invest in single family. They're like, what's the cap rate of that single family? I'm like, are you fucking kidding me? I mean, I can run it, but it's not good. Not any of them are good. Cap rates in the different types of commercial properties. And we're gonna, like, I'll let you guys just venture down the path of
Let Dan go first.
actuals versus pro forma.
Throw him under the bus. Stepping out of frame here.
But like talking to the group.
Okay, so
Performance.
yeah, I don't know. The question is basically kind of about cap rates and just kind of be very general. Cap rates are basically going to be, and maybe the simplest term is going to be your rate of return on a property. And then it's also used as agents for us to kind of price out. And then there's generally a range or a cap rate that a market might be as properties in this area are selling, at this cap rate. So folks buying it are expecting this return. I would kind of say over the last 2 years that they don't mean anything.
Thank you.
And don't get me wrong, I still calculate them out and use them as a guiding principle for properties, but there is so much wiggle room you can do with Excel spreadsheets and numbers, but also when you're looking at a property, you're basically probably just going to want to look and see what your actual numbers are going to be, what kind of cash flow you might get. And then sellers, we're at a place right now where sellers we were getting a 6% cap rate, or that's what previous things were selling at, or 6.5%. And you have buyers who are saying, well, bank's giving me a 7% interest rate, and then they're just staring at each other. And that's where we're at. Now, eventually we might move on from that, and who's gonna give, we'll see, but that's kind of just where things have gotten in my opinion, with caps. I would say generally if somebody wants a number, because we haven't talked about it, it really depends on location, property, how new it is, how much money it's bringing in.
The asset, is it industrial office,
Yeah,
retail?
the type of asset. So it's really hard to say without getting into a lot of specifics on it.
A cap rate is just a picture. All it is a picture in time of what a property produced before debt service in the last 12 months. That means nothing if I buy a house and the next day the roof goes out. Because then all of a sudden my cap rate means absolutely nothing.
No, it's just really bad.
My cap rate
Still
goes
there.
to zero basically. Without going into like my opinion of it, well I guess I can say my opinion of it or even want, but unless you're starting to play what they call the capital markets, and the capital markets is generally speaking above $10 million, at that point cap rates mean nothing for anybody's room. The reason cap rates start to matter above $10 million is because at that point, you start to become more of an institutional grade asset, and it's all managed and run very similarly, so everybody has the same accounting methods.
So time out. You said cap rate doesn't matter until 10 million.
Until 10 million. And then to that point, when you get above 10 million, maybe less, 5 to 10 is really kind of that spot. It all depends on what market you're in. And 10 million in Des Moines is different than 10 million in New York City. 10 million is where the threshold kind of hits. Above 5, you're kind of playing it. But at that point, you're playing the arbitrage game. And for arbitrage, if you don't really understand, it's super simple. All you're trying to do is say, my cap rate is 9, I'm gonna borrow at 7.5, that's a 1.5 point spread. A 1.5 point spread is gonna create a 12% cash on cash return. You're saying, what's my cost of funds? What's it cost me to borrow it? And if I can hit a 1.5 to a 2.5 point arbitrage, my cap rate is above what my cost of borrowing is, then I can make, generally speaking, between a 12 and 18% cash on cash IRR return. But again, until you get to that $5 to $10 million number, they really mean nothing, because anything done less than $5 million, everybody operates it so differently. There's going to be, well, I fixed that light bulb myself, so I didn't charge someone for that, and I do my own leasing, so I don't charge for that as well. Or it's going to be like, yeah, I paid someone for all that stuff. And then it just becomes, how much do you want to yourself? So cap rates really mean nothing. In my opinion, the only number I care about whenever I invest or my clients, personally, I think is cash on cash. Some investors might talk about IRR, internal rate of return, which is basically taking your cash flow and then anticipating a future sale and taking that sale minus whatever you bought it for to create a profitable return. I hate that metric, because you're just picking some future number out of air and going, ooh, that sounds good, I'm going to sell for more money. Shocking, you always sell for more money, and your IRR is always 15% or better. So for me, I like just look at cash on cash. Cap rate, again, means nothing. For me, I'd rather buy a great location and figure out the cap rate later.
Okay, go ahead, Sebastian.
How do you modify it?
Since you set up the cameras and stuff, what's your question?
Can I drop your mic?
Okay, when I have conversations with people that are invested in Des Moines, they talk about the basis points, and they can move basis points one way or another on the pro forma to adjust how appealing multifamily complex looks to investors. Mm-hmm. Elaborate on that, and how is that possible?
Just to clarify, the question was talking about how you can change the basis. Now, by basis, my first question becomes, do you mean basis in terms of a cap rate, or basis in terms of the taxable, what you're being taxed on? That's two different vocabulary terms.
Cap rate.
My cap rate, okay. So at the end of the day, most agents, Dan mentioned it, operate on a proforma kind of thing. We can literally change proforma with just a few numbers. I can just be like, oh, well, vacancy rates should be historically 3 to 5%, and this building's running at 7%. Well, let's just change that number real quick, and we're going to make that basis. That's going to change up all of my gross income. I saw, even just recently, we saw it back to, not to segue 2 months in advance, but a lot of agents for multifamily were saying it's going to be $300 annually for insurance premium for one unit. 4plex is going to cost $1,200 a year of insurance. That's nowhere near where insurance rates are at right now. You're probably closer to like $1,500, $1,600 for insurance rates, if not more than that, maybe $2,400 even. A lot of agents will start pulling numbers out and saying, here is the story we want to sell. A good buyer or a good agent will know which numbers they can and can't pull out. And I won't go into the details here, but when I look at a profit and loss statement or a rent roll from 12 to 18 months out, first thing I'm doing is looking at all numbers and seeing which numbers just drastically don't add up. Like if I see a repair account that has $20,000 one month and all the other months were $8,000, I'm going, wait, what's that? And can I pull that out of the operating expenses to change the cap rate? Because that could be classified differently via accounting terms, CapEx.
Give one more example of kind of an industry standard. I'm guilty of it. Jared's guilty of it.
No, I'm not.
Is 5% property management.
Oh, 8% always 8%.
How many of you out there have a property manager that you're paying 5%? That is almost entirely what every OM I've ever looked at says is 5%, and it's just non-existent, unless it's in-house maybe or something like that.
This is why I want to clarify this. All about being educated. It's why we come to these events. Because to your point, Dan, I usually do 8% to 10%. I would say 5% is complete crap, unless I were to look at the profit and loss or the OM, and if I see leasing commissions in there, I see lease up, and I see R&M and salaries run differently, and I see payroll, expenses. If I see all these numbers line item out in their own line items, and then I see 5% management fee, I might believe 5% if I see the other line items. If I just see that one line item as 5% and none of the other line items, it's like, wait a minute, I'm calling BS on this. Again, it's just a skill set of knowing what to look for, because one thing I've learned a lot, and especially leasing, commercial real estate, is whenever you're looking at a proforma or an income statement or a balance sheet or even a lease of any kind, what's important is not what's in that income statement or what's in that lease, it's what's not in that lease. Anybody in the world can read a lease. We all have leases here for all of our tenants. I can read all your leases and they're probably all different. Probably understand all of them and go, yep, this is brilliant, and that someone has a lease here that someone else hasn't thought of. And that's the important piece. What's most important whenever you look at anything is what's not there. That's where the skill set and the education and the experience comes into play, is knowing what's not in the income statement, the expense sheet, or the lease in terms of commercial real estate.
So before we take Q&A, I remember my question. This group, they might want to work with a commercial agent. And so working with a commercial agent, what does it actually look like to buy or sell with a commercial agent? What is that? Where do you look at deals? One of my biggest, and the reason I ask this question is it's very personal. When I became a residential agent, I realized that commercial agents play by different rules. Like no rules at all, which is, I am a big no government fan, big fan of that. But the fact that some of them just post their listings on their own website and they're nowhere else. That makes no sense to me as a seller, right? Like, why would I want my listing to only be on my agent's website? Somehow they figured out a way to get the seller to sign the agreement to do that, right? How do you manage that? How does someone in the crowd be like, hey, Jared, hey, Dan, like, I want you guys to help me find a deal. Where do I look? What do I do? What's that look like?
Yeah, so for starters, Darson's not wrong. It's the wild, wild west. There's no rules. I mean, there's a couple of rules, but not a lot. And you have a whole gambit of different folks out there. Like Darson said, there are agents who they will have a deal and it's like, hey, I heard you have this property for sale. To my face, they said no. And then like 2 weeks later, that property sold. It was like, okay. Okay, interesting.
I want to name them.
Yeah.
That was probably names.
So, and then there are other folks, which I think I tend to be on the opposite side of it, where, I want everybody in the world to know I got this deal. You want to create that competition, especially maybe where the market's going from, kind of a free money, people will buy anything at any price to now you have to really get out there and sell a property. Maybe starting to be the same way on the residential side. I'm not as privy to that, maybe getting there. But so, you kind of have everything in between there. But I would say you need to meet maybe a couple commercial agents, talk to them and see who fits well with you, what kind of plan do they say they have for how they want to market the property, maybe some contingencies, how they want to do things, or basically just what the process is going to look like. And on top of that, buyer protocol, because sellers generally just, they pick an agent and they go with it. But as far as buying, if you're out there looking for something, I would be upfront if you want, which there are plenty of folks in here that I've dealt with, but I know if Jared showed them a great deal, they're going to go buy it from him, and that's okay. But I would say if Jared has taken you to properties, opened the door for you, or told you about it, you don't go around and go to another one and then have them take you there. But you need to be upfront with the relationship. I think a lot of commercial folks know that buyers are out there, especially investors, are looking to get a good deal. And, part of this whole business is we're out there hunting for properties, trying to get a good deal. And if Jared finds one before I did, good on him. I'm not upset about that, unless maybe I was on the same one and he beat me out for some reason. That hasn't happened yet. Just kidding. Probably has, honestly.
No comment.
Yeah. But there's something about just being a decent human being and being upfront communicating, which is really just the biggest thing, which most folks, you should be doing that in your daily life anyway.
And I'm going to talk a little bit here. Darson's might hate this or like this, I don't know, but
I don't care.
Commercial real estate, so what's the stat? How many agents are there residential, Darson? 3,000 agents?
There used to be probably like 2,800.
So okay, there's 2,800 agents residential in the market. I did a count one time. There is only 100 or so commercial agents actively in our market doing deals any given time, give or take. I know those 100 agents, I'd say about 50 to 60 of them do the lion's share. I can name the teams right now that do the lion's share of all the business. So we are a very small community, and we talk, and for the most part, and I'll say experience here, if a residential agent calls me and I don't know the agent's name, they are probably falling to the bottom of my callback list. Darson, I've had experience before, like he's tried to call certain agents and they won't turn his phone call. I'll text them and in 5 minutes I have all the information I need because they know our name. They know Dan's name, they know my name. We're a very tight-knit community, and that can be good and bad in certain ways. So when you want to work in commercial real estate, I would recommend talking to an agent, seeing what their experience level is, seeing if they do specialize in anything, because I can tell you right now, if someone here wants to list their office building for sale with me, I'm probably not going to list it because I don't know anything about office space. If it's industrial or retail, maybe, Multifamily, definitely, that's what I specialize in, that's what I do the most of. If you want to work with me in terms of like a selling standpoint, that's what my first thing I would say. In terms of if you want to work with a commercial agent in terms of a buying standpoint, do not come to me and say you want a deal. I'm sorry, but I have a list of 1,218 names of people who all want deals. And if you simply want 48 plus value add multifamily units, then get in line. Because I have everybody in the world who wants 48 plus value add multifamily units. It's your job to see the value add. The point about one of my clients who was looking at office buildings from 50th Street to 86th Street in a certain price point. If you want to go hunting, that's what I'm talking about. If you actually want to work with me as an agent, that's what I want. I want to hear, I'm looking at this neighborhood, I want to buy between a 4-plex to a 12-plex. I've already done all my research. I want the rents to be this. I want the ceiling heights to be this. I want the age of the property to be that. I want to get it for this price point or around this price point. Because guaranteed, I probably know who one of the sellers is gonna go, yep, I got it. I got one deal, I'll call them right now. Let's go hunting. Because I know most of the sellers in the market for multifamily. So if you want to be a buyer, the more specialized you can get, the more likely we are going to win. It's like going fishing. Are you gonna just cast it out there and hope you catch something? It might work, but the more you can be like, I'm going hunting for a 300-pound trout, and I'm gonna use this kind of lure at this kind of depth, and we're gonna go into this specific spot of the ocean, you're more likely to increase your odds of actually getting the deal done. The other thing I know for me, honest to God, just one of my first questions I'm gonna ask anybody is, where's the money coming from? Because I have, again, out of that 1,218 or 81 people on my list, I will honestly say probably 600 of them are probably syndication groups who are, well, I'm just gonna go raise the money because someone told me I can go raise the money. Well, then my next question becomes, have you done any deals? And then I'm start asking about experience levels. And I'm not against syndications. I've got clients who syndicate as well. But if you don't have an experience syndicating, you're probably gonna fall again closer to the bottom of my list. I'm just being very honest. I have 5 or 10 clients who have shown experience to close quickly, and when the call comes, they get the call first. It's just the cream rises to the top. I hate to say it, but it's how it is. But yeah, if you're a seller, you want to interview the agent to figure out what they're going to do. If you're a buyer, again, the more specialized you can be, the better off you can be. And for anybody here too that's ever done a rental or a flip, I'm just going to make that analogy too. Example, when I used to buy houses and flip them and rent them, I never had luck on the north side or east side of Des Moines. I don't know why. Anybody that can do that area, kudos to you. My specialty was 3-bed, 1-bath, or 2-bed, 1-bath, Fleur Drive, Southeast 14th, South Downtown, North Orange Post Road. You had a 2-bed or a 3-bed house in that area, I want to make an offer on it. I knew that market, I knew the tenants, I knew all the businesses, that was my market. Obviously I had success because I knew exactly where I was hunting. Would I do deals outside of that? Sure, once in a while, but I knew what I was looking for because I'd had experience and I had luck and some success. So that's, I guess, my answer is know what you're looking for.
You mentioned syndications. Over the last year, syndications have had some struggles, had some successes, probably more struggles, but give us your just take, and Dan, we'll start with you, just take in general of what does this group have to take away from, what does syndications mean to them? Should they think about them? Should they focus on them? Or should you just say, hey, let's do our own thing? Or should I just partner with someone? Or is that the same thing?
Just going from a syndication from ground zero is going to be a very difficult thing. If you need to get a mentor or get with somebody who's been doing it, or a group, and some of those groups cost a lot of money. But that would be what I'd say if you're wanting to get into a syndication, at least unofficially intern with some of them, kind of figure out how they're doing it. If you can do it on your own, if you can convince a family friend or somebody to give you some money, I would try that. If you can partner with somebody, I would try that. If you're starting to get something a lot larger, then yeah, you might need to start looking the syndication route. I would say a lot, which it was kind of brushed on a little bit in one of Jared's answers, but there are a lot of syndicators out there that haven't actually syndicated anything, but they're interested and want to get started. If you don't have a track record, it's hard to get $10 million together to get a deal done. And that being said, then you also have to worry about what their underwriting was, because there could be a lot of rosy rent increases. Over the past how many years we've had maybe double-digit rent growth, which I'm not forecasting that to be a thing for the next few years probably. I could be wrong. But so then their whole business is generally to, maybe 3 to 5 to 7 years, they're going to take a property, raise the rent, improve it, and then sell it and return money to investors. which there are plenty of folks that do it and are successful. I guess kind of don't necessarily know where I'm going off that. It's more of an advanced level thing, and it's going to cost you lawyers, and there's rules around it depending on how you're doing it. So I wouldn't just go it alone, I guess, if you're going to go that route.
First off, if you're going to syndicate, the question becomes, are you going to be an LP or a GP? If you want to be a limited partner and just invest in a syndicate group, that can be wonderful, and I actually highly encourage it. It's actually probably, I think people always want to be the GP, so they want to be that big hero with the cape, and yet they're the ones doing all the work, and the investors are the one doing just earning a return. So I'm actually a big believer in being a limited partner if you know how to interview and ask the right questions of the general partner to have the right strategy involved. The only reason you partner with someone or syndicate is to get to another level you cannot get on your own. Generally speaking, because at the end of the day, if we go buy a $10 million asset by ourselves, we would. Like, if we see the good deal and we see a return, like, I'm gonna go do this myself. Why the heck would I do someone else? Generally speaking, you go from individual ownership to partnership, from partnership to syndication. What I would say is, and I actually got Amy Darson this question one time before, in my opinion, the syndication phase that's been going on is no different than the meme stocks that have been taking craze and the crypto trying to take down Wall Street. In my opinion, it's the same concept. It's people that have had success in syndication in the last 20 years, and they've told their friends, and their friends told their friends, their friends told their friends, and it's become this wildfire craze of, my friend made money being the general partner, so I'm gonna go make money. I'm gonna go buy 1,000 units or buy 10,000 units, whatever it is. And it's become a wildfire craze, just like the meme stocks and like crypto. At the end of the day, what a syndication is, and I'm gonna make it really simple, it's no different than a mutual fund. When you buy a mutual fund, you are investing in the overall fund to make money in a multitude of stocks. When you are a limited partner, you are investing in that syndication to try to hedge your bets and make a return that's maybe higher than the stock market, but you're still trying to hedge your bets. When you're the GP, you are trying to essentially be your own miniature hedge fund. In a simplified version, that's what it is. My only theory on that is two things. One, I personally believe Wall Street will crush you because Wall Street is Wall Street. We all think $10 million is a lot of money until you go to Wall Street and they lose that in a matter of minutes. If you want to be a GP, you need to really buckle down and know what you're doing. As I counterbalance my first point about I love owners who want to be LPs, I also would say if we're all in this room, most of us do not invest in the stock market because we don't like average returns. And if you're an LP, you're probably going to get, in some ways, average returns. I would encourage most people here to not invest in syndications and to not do syndications. Not saying you can't do it to an success and do it well. It's just that, and I think you mentioned as well, some of the groups. I've seen more of those groups make money on the fees of that group than they actually make doing their own deals. Many of these GPs, I've seen this, they do not make as much money as you might think. And until you really hit about 1,000 units, which in perspective is about $10 to $20 million of real estate, you make almost no money being a GP. I've seen this, I've seen balance sheets, I'm telling you, it's like flipping, it's not as sexy as it seems. So at the end of the day, that's just my advice on syndications. I can go into deeper stories.
Okay, we're gonna do Q&A out here. I know on the Facebook group we had a question about tax. Someone making high W-2 tax income without being tax advisors. What have you seen your clients do legally avoid some taxes by buying commercial real estate?
Well, so probably the most common thing, and most folks have probably heard it, a 1031 exchange is probably your biggest way to defer taxes on commercial real estate. Basically all that is depreciated a certain amount over the course of how long you've owned a property. You go into a slightly bigger, maybe a lot bigger property, and that cost basis, you don't have to pay it when you sell, and the IRS doesn't forget about it, but it goes into the next property that you have. As long as you keep getting bigger, you have more value there to write off and keep depreciating. You can also, something that was a newer thing and it's starting to phase out, you can do cost segregation studies and get a lot of that depreciation up front. What are we at now? 80%, and I think 60% next year.
Yeah.
And it's going to be less and less, but you can basically pull forward all that. Maybe if a tax person's in here, I forget, depending on the property, 27 and a half or 15 years or whatever it is, depending on the asset, pull that all forward.
27 and a half years, multifamily, 39 and a half.
There you go. But then you get all that money, and it's a good way to have that cash up front and continue to grow your portfolio.
I'll talk more to the cost segregation analysis. Multifamily is very common for cost segregation analysis. The 2016 Trump tax code law changed that, where you could to your point, pull on forward is 100% last year. This year's 80%.
So like
Basis down.
To touch on that, it's not going away. It's just not the first year.
Yeah, so what a cost segregation analysis does in a simplified version, multifamily or houses are depreciated on a 27.5-year basis. That's 3.63% annualized per year. $100,000 house, you take off $3,603 depreciation every year of that property. If you do a cost segregation analysis, what they're basically saying is this carpet's going to depreciate faster than 27.5 years, so we're going to depreciate this carpet on a 5-year basis and this cabinet on a 10-year basis. You try to pull all that tax forward, and then you can generally take most of your tax savings within the first 5 years. But what's happened is with the Trump tax code, you can do 100% last year, this year is 80%. You can take the value of that 100,000 and almost depreciate 80,000 this first year. And then if you're a real estate professional, you can use that as a carry forward against your real estate income. If you're a real estate professional, talk to your accountants about how that actually works. What I want to caution people on is multifamily houses is 27.5 years, commercial is 39.5 years. You can do cost segregation analysis on also retail and office. In fact, office you can get even more than multifamily because it costs a ton of money to redo an office space. Ask me how I know. What I want to caution everybody on is that everybody wants to look to cost segregation as an answer. And it is one answer. Here's the problem, and Dan touched on it. Taxman does not forget. I've seen owners who have done cost segregation analysis studies and they're like, I got all this tax benefit year 1. And then guess what? You sell year 3 or 4. And all of a sudden, taxman comes back to bite you in the ass. And now all of a sudden, you owe more in taxes than what you actually saved on, or what you actually put in your pocket. It can happen. At that point, then you're forced into a 1031, or you might be in a bad spot, or it might kill the whole deal. Whenever you're using a tax saving strategy like a 1031 or like a cost segregation analysis, make sure it's actually a strategy and you're utilizing the right tactics inside of it, because it is just that, and it can come back to really bite you if you don't plan. Like I've done cost seg on my medical office building, retail, but our plan was to hold over 5 years. Less than 5 years, we said it was not going to help us. So if our plan was to hold 3 to 5 years, it might not matter. Again, that's another thing you need to think about here is that what is my overall exit strategy? And back to my earlier conversation, are you investing in the ship, the boat, or the ocean? And if you're investing for the long term, guess what? I can take 27.5 year, 39.5 year depreciation and take that little bit every year and be totally happy. So I don't necessarily need that all the time. It's just one avenue if you want to use it.
I mean, you sell that in the 27th year, though, right?
Then you're screwed.
Or you just die.
Because then your appreciation dies.
Okay.
You make your basis redone.
Anyway.
In 3-year basis.
Q&A. Chad, go ahead. Chad's question was real estate residential compensation versus commercial compensation. How does that work?
The compensation is actually really very similar. You know, there's generally going to be a 6%, 5%. When you start getting into larger deals, it might just be a flat fee or a much lower percent. And the same with leasing. You can kind of, depending on what your agreement is, it could be, you know, a percent of your gross rent or your base rent, something in there, not to get into too many details. But yeah, generally it's a percentage of the sales price. Very similar. Maybe kind of one of the things that's a little different on the commercial side is going to be your letter of intent. You know, you're going to buy a house, you walk through it, you like it, you put in your offer, maybe it goes back and forth a few times. To maybe save time, save paper, I don't know, or do things unofficially, there's a letter of intent process with commercial properties where basically you line out all those major terms of a deal and you send it in basically a memo, not a contract, but then you can go back and forth with that unofficially, but get to the end of it. Some people sign them, some people don't. It honestly doesn't matter. But then you go and you work up a purchase agreement or a lease, and then you get a property under contract. Yeah. You don't have to do an LOI if you really want to be serious about something. You go in there and you put in your offer. You can still do that, and that's probably a lot more important, or it's done a lot more on leasing, because there are a lot more things to hammer out. You can still get inspections, although it's, you know, you're gonna get into due diligence, which it's a little different in commercial world, where a lot of times for residential, it's, you know, 10 days, 2 weeks, we're gonna have an inspector. If the home inspector finds something, we can argue about it and go from there. Where in the commercial world, you say 30 days due diligence, maybe if it's a more complex development deal or zoning issue, you say 90 or 120, something like that. But then if on day 29, the client wakes up and he didn't sleep right and his back hurts and he's mad, he can walk from that deal. It is what it is. There's no, you get your earnest money back and you walk away. So it's a little bit more free in that stance. Also during due diligence, you're probably gonna get more things where depending on the property, you might have a phase 1 environmental study done. You might have some zoning issues to go deal with. You might need to talk to developers or get bids for contract or some of the same stuff. But at the same time, you're getting title work, a title opinion, your abstract updated, all that kind of stuff, just like a house. Although it is really confusing for out-of-state folks because we are an abstract state, and I don't know how many people we've had to argue with over the phone about title insurance.
You can still do it technically.
Unnecessary, but yeah, pretty similar. It's usually maybe a little longer time frame than a residential deal. Honestly, if you've done one or two, it's nothing I don't think anybody could wrap their head around it. But you don't know until you see it, and then it's not that hard.
When you're doing a leasing, it's really important to have letter of intent. I tend to be a little more on Darson's point earlier, the Wild Wild West. I do a lot of deals sometimes verbally because I just don't like the paperwork and I'm just not that detailed guy. I was negotiating a deal potentially on verbal before this started, and I'm doing verbals back and forth between buyer and seller all day long without actually having anything written, because I just don't want to write 20 documents back and forth with all them arguing about details. So you might do a verbal on a buying and selling. On a lease, you definitely want letter of intent. From lease, you will letter of intent to a lease. From a purchase and sale, you might do a verbal. Otherwise, you might go on letter of intent, might go to purchase agreement as well. The biggest thing that I would say the difference is, we all like to define commercial real estate as whatever you want to define it as. The biggest reason we define commercial real estate the way we do is how banks view it. That's why I said before as well, is that really it's how the bank views. So banks actually dictate commercial real estate more than I think we do, because the bank has said a commercial real estate is office, retail, industrial, or hospitality or land. And then they say over 5 units. So how they lend is what is. And the reason I say that is that residentially, any agent in the room, if you're residential, the first question you're gonna ask any buyer is, are you pre-approved? A buyer can go and get pre-approved for a loan from a bank, and that's the first question you're gonna ask to show they're qualified. Our process is a bit different. What's common for us is to do all your due diligence, your inspections up front, and then you move into a financing contingency. So what's common for us in like multifamily, we might do a 30, 30, 15. 30 days of due diligence, 30 days of financing, 15 days to close, for a total of 75 days. Because what you want to do is you want to spend all your time seeing if this property is even going to make sense financially before you spend money on the appraisal, on the abstract, on the title, on all of the closing costs that's going to go into the fee. And then again too, and it wasn't a big deal a couple of years ago, but right now rates have changed so much so fast. Where a couple of years ago you could say, I'm gonna base my underwriting on this investment at a 4% interest rate. That worked when rates were up 4%, they were staying stable. When rates are going from 4 to 5 to 6 in a matter of a few months, and we have a longer due diligence inspection period to do all this research, that could drastically change your deal up by the time you get to closing as well. So we tend to have our financing on the back end, not on the front end of commercial real estate, which is the biggest difference. And again, that's what, in my opinion, dictates commercial real estate is the banks, because they have the ultimate money. They're the ones giving 70, 65, 80% loan to values. Because really, that's your partner on the deal, which I could go into a whole conversation of choosing the right banker and different banking options. In terms of the fee structure, I would say it's the Wild Wild West. I've done deals at 5, 6%. I've done deals, to be quite honest here, as low as, I don't even know, like 1%, I think. For me, it's all a matter of what comes back to, this is my opinion only as an agent, my commission means absolutely nothing if there's no deal that closes. Like at the end of the day, if I'm talking to Darson and Darson's like, well, I want $10 million, and Dan's like, well, I want $5 million to buy it, and they're both buyer and seller, I'm like, well, my commission means nothing because you guys aren't even freaking close. What's my commission matter? Now, it's one of those things where it's like, Darson's like, hey, I am firm at 5 million, and Dan's like, I'm at 4.98. And it's like, okay, we're $20,000 difference on a $5 million deal. Let's figure out this commission. I'm not gonna let my commission stand in the way of it, which is pretty common in commercial, I feel like. Maybe it's just me, I don't know. I am my own broker, so I have only myself to answer to, which is a little different. You might have to answer to Kevin. Kevin might slap beside the head. And Kevin's great. But that's for the commission. I would say it's more variable. But again, we're dealing with larger numbers. If you get an extra point off on a house for $200,000, you're saving $2,000. An extra point on $5 million is 50 grand. That's someone's salary. It becomes more variable as you do bigger deals for the commission rates. And then in terms, and again, too, at that point, it all depends on the deal. Again, I think the deal I had 1 point on, it was a seller. He said he wanted to sell. I made one call to a buyer because I knew he was going to buy it. Again, back to my top 5 list. Buyer said yes. It was like a 30-day closing, and I made like 1 point commission. But it was one call, probably 3 hours worth of work, and I think it was like $10,000. And I was like, oh my God, I made 10 grand. It was 1 point commission on $1 million deal, but it was 3 hours worth of work. Not all of them are that easy, but then like some are, some aren't. So it just depends. And then yeah, for the process, really it's just a matter of the financing usually comes after the fact.
Add to that, slightly on the residential side, like we as residential agents are very regulated on how much we charge at the beginning, right? So we get a listing contract and it says it's X%. The commercial side, they can change that shit all the time. They have no one to regulate. Residential's a little different. And when I say commercial, I know the banking makes the decision as the 5+.
Some makes
On the, as a broker or as brokers, how they work, like it's not that regulated. It's more of like the DMAR MLS versus other MLS versus not on the MLS in general. There's a lot of factors that go into that. I'm the dumb agent that says negotiate as hard as you can and make sure that you're getting the value that you think you're paying. Like make sure it's valuable to you. I know you guys said X%. Make sure that you think that you're getting that value. There is 3,000 to 2,800 agents in Des Moines and DMAR, right? On the residential side, there's 100 commercial agents. You need to be comfortable with what value they are bringing with the percentage that you're paying. That's called the market, the free market. That's my motto on it. Tony, go ahead.
Oh boy. You know who you are. Why aren't you a commercial real estate?
Why aren't you, Darson?
They are. Why aren't you?
Yeah, that's a great question.
Yep.
The reason
We
is
won't let
like,
him in.
What?
We won't let him into the group.
Oh, I could go. I could do it. I've decided my business model, like I have much more fun helping people buy single family up to like, I would say under 2 mil is kind of my sweet spot in general. Below that, like I can hang. I guarantee you I can provide as much value as any of the commercial agents. Above that, no, I can't. That's my motto. Above that, I'm not your guy, right? Like, I'll tell you, if you bring me 3 mil, that's just a different buyer. They have to have way more money. I do not have a Rolodex of that. So,
But knowing who you are, I believe that you can find that easy.
Tony, I could do wholesaling just like you. I don't have a problem.
Why do you like that?
I really like it. I like the under 2 million, right? Like I sell 60 units a year. Like that's a lot of fun. It goes really well. You gonna answer it for me?
Yeah, I can answer this one here. So what is the what's the story like it goes where the guy who chases 2 rabbits catches neither?
Oh, I've had that for 3 years.
Well, that's the point I'm making is that in my experience, and this is talking more from my experience of 15 years or so it doesn't mean too much. In the beginning, I encourage everybody to try everything, all investments, whether you're try being a wholesaler, try being a flipper, try being a rental, try being an Airbnb, maybe try being an agent. After a certain number of years, you're going to figure out like, man, I really don't like this thing. And again, try commercial, try industrial, try retail. Like I said earlier, I love industrial. I mentioned this earlier, I will never own another house or apartment complex ever in my entire life if I can help it. And I don't own any now, and I never want to own another one again. It is awful, it is stupid, I don't know why you want it. Every tenant's an idiot, and I don't want idiots living in my property. Period, end of story. But again, I can say it because I've tried everything. So I know what I want to specialize in now. So to your point, Darson, like when someone says, why aren't you an agent that does this or this or this? Well, I'm not good at it. Why am I an agent that specializes in multifamily? Because I know it, I understand it, and I do not want to own it. Which means that when I work with my clients, somewhere in this room, I'm never going to compete with you on a deal. I know that. So that's why I choose to specialize in multifamily specifically, because I know I never want to own it again, so I will never compete with you. With that being said, if you want to start buying industrial retail, we're going to the mat real quick. I can say confidently, I've called 8 clients of mine and said, I found an industrial deal, you have 2 hours to get back to make an offer or I'm buying it myself. And they didn't call back and I made the offer myself. And sometimes I bought it. I've actually had clients partner with me on deals because of that. So to your point, I think with Darson is that Darson knows what he likes. He's experienced commercial. I know we've done deals together, commercially, some apartments. And some other things, and he knows how much he hates us commercial agents sometimes because we don't answer his phone calls, and he knows what he's good at.
So not necessarily to answer for Darson, but kind of from my own experience. One, we're kind of up here giving you maybe a little bit of a highlight reel. Like, yeah. Yes, you can be very successful being a commercial agent. You can be very successful being a residential agent, especially where house prices. There are houses now where there are agents who are selling houses that average over $500,000, and it's like, dang, those are some good numbers. And there are hard parts going from when I was trying to find houses or duplexes. I can go and I can track down who owns most of that stuff pretty quick. But until you got to fight through attorneys, property managers, LLCs, and I don't know if is Derek here? I don't know if Derek's here.
Pitfall?
Yeah, Derek was doing some stuff and we talked about it. And he was like, man, I'm just sick of talking to these attorneys and LLC. And it's like, yeah, there are different struggles that you have to do. So if you like one thing more than the other, that's, go with it.
And real quick, I mean, to Dan's point too, I know at least a couple of commercial agents who bet their entire year on one deal. Literally one deal. They'll do one $10 million deal a year. Let's say it's full 5% commission. And if that deal bombs because interest rates happen, or they wake up the wrong day, the buyer does, and it's out, they might have made no money that entire year. Or I know some residential agents who are like, yeah, I close 300 deals a year. And I'm like, wow, you're getting paid every day of the week. And like me and Dan are like getting paid every day of the week. This is just like, what's that like? And might get paid 3 or 4 times a year, and we got to live off that for the rest of the year.
Oh, Tony, follow up? I'm messing. Anyone else?
Anyone else?
I'm messing. Tony, go ahead. Look at you,
This
Chad.
is more of an ocean question, but
Blue Ocean Strategy?
No, it's an ocean question. He brought up ocean twice, and I think it's an ocean question. You guys brought up office space, and all three of you looked at each other and laughed. Can you explain that?
Great question.
Yeah.
The question is basically, we brought up an office building, kind of looked at each other, and why was that? Office space is, out of all spaces right now, the commercial real estate world is hurting. I guess not all office. So if you have, under 10,000 square feet, maybe you've got 2,000, 6,000, there are still smaller businesses that are eating up that space, and that's still moving forward. But if any of you have seen in the paper, Wells Fargo is selling how many buildings downtown? Nationwide is selling stuff. The city of Des Moines is maybe scooping up a large one, but that is, that's still a maybe as of right now. So there's kind of been this move away from working just in an office all day. It was happening, and then COVID just pushed it through the roof. So now there's the work from home, which it's come back to more of a hybrid model. Jared might know some stats better, but I'm kind of guessing. I would say we're probably 60 to 65% full downtown. And then there's also some shadow space. There are still bigger companies that have that space leased, but nobody's coming into work there, and they're just paying rent until the lease ends. They're probably out of that space when the lease comes up. On top of that, a lot of these buildings, commercial lending in general, you maybe have 3, 5, 7, maybe 10-year financing. Well, if you're gonna get hit with a bunch of these vacancies at the same time as you're getting hit with a refinancing, just in the real estate market in general, there are a lot of capital calls coming where banks are, and this is across all asset types, but banks are saying, yeah, we'd love to give you a loan for the next 5 years, but you gotta give us $1 million so that your debt service coverage ratio makes sense. If you have a larger property, that number gets bigger. If you don't have any tenants, your wallet might be empty, kind of thing. So that's kind of what's scary for if you've got 100,000, 200,000 square feet or more of office space, and there just aren't tenants out there looking to do it. There are some companies that are doing their best with what they got, and they're creating actually some pretty nice hybrid. This isn't meant to be a shameful self-promotion of Iowa Realty, but I don't know another space off the top of my head. But the Mill Civic office, if you go in there, they've got like a co-working space, they've got mini golf and foosball tables and a kitchen and a coffee machine and private offices for people. So it's kind of this new hipster way of working, I guess. Sorry if I'm offending anybody, but it's a new, they've reworked this office space to try to get more people back in, and it's worked to some extent, but I don't think it's ever gonna be back to what it was.
So I don't have any stats because office is the one I know least about. I have medical office, which is very different, very niche compared to regular office. What I can say is this, and I'm gonna talk more again on a different trend, different trajectory than this, but typically the faster something changes, the more you are prone to goods and bad. If we look to, let's just call it the 4 segments: office, retail, industrial, multifamily housing. The reason everybody likes multifamily is because it's a timeless classic. You can literally go back to the old kingdoms and fiefdoms where it's like, I own this property, you owe me rent, right? It is not a changed model in about, 2,000 years now, or 1,000 years. If you go to industrial, it doesn't change very fast. Retail has changed very fast because of the internet and Amazon. if you looked at office space, how fast does an outpace, what affects office space the most is technology. So the technology of office space is what's going to affect that most, which means it has to go over the most turnover, the most changes. If you had an office space in 2000, it was like the newest, coolest, greatest thing. By 2010, if you didn't have Wi-Fi, you were like, wow, what a loser office space. It's gonna require more capital. By 2020, it was like, we're from home now, it's called COVID. The reason I say that is it goes through changes so much faster. And that's neither good nor bad. I know people that made a lot of money in office space, R&R Realty and the rubrics have made a ton of money in it. It just typically requires a lot more capital and a lot more experience. So I can't say anything good or bad to it. I just look to how fast it takes something to change. And if it can change very quickly with technology, then I am slightly concerned with that. Retail, everybody's afraid of retail. But I once heard the owner of Taubman Center, which Taubman was once owned and then subsequently sold, the Williamsburg retail center, never been to retail. He one time said in a meeting, he goes, I'll invest in retail real estate all day long. Someone said, why? It's changing, there's Amazon, there's all these online things. And he goes, yeah, you know what? Back in the day, they had this thing called the Coliseum and Gladiators, and in front of that was called this thing called the Forum. It was where people would go to buy and sell and trade goods. He goes, the idea of buying and selling in a retail capacity is in our blood for thousands of years. I'll bet on that. Now, how many hundreds of years back, thousands of years back, have we had office space? I mean, if anybody knows, we can go industrial back to 1900s, 1800s. We can go back apartments, houses, fiefdoms to thousands of years. We can go back retail, even more thousands of years. So my answer to office space always comes back to just how fast can it change? Because again, we have Wi-Fi that's come out. We've had high speed. We went from cubicles to open space. Now we're from open space kind of back to cubicles because of the whole health thing. And then we have Zoom. So just how fast can it change? So that's only my opinion of when I'm looking to invest something, how fast can it change? This goes back to, and again, not to give Darson kudos to tomorrow, I'm still hesitant on the Airbnb market. It's still so new that you are prone to the changes faster and quicker, and unless you are watching that market very closely, then I'm just cautious about investing. Not saying you can't make money in Airbnb, you probably can make a ton of money in Airbnb, but it goes up and down so fast because technology affects it so much more, and then supply and demand. So that's kind of my answer to office space, and then in general, all of really investing.
Chad before Tony, goodness gracious.
You can take this one or pass, but I'd be interested to know some more details about lending and financing in commercial real estate.
The 101 on lending and financials of real estate, of commercial real estate, I'm guessing, right? Non-owner occupied.
Start off by not a banker. You're going to be looking more at debt service coverage ratio loans, your commercial loans. You're going to have shorter term, 3, 5, 7, 10 year terms. You're going to have less, you might be able to find it out there, but you're generally going to get a 20 or 25 year amortization. You can look around. I know there have been different programs in the past where I've seen some 30 go up there. And then there's also, you can get to a whole nother level of like institutional money, but
Capital markets.
yeah, but that, it's pretty similar. You're going to have a shorter term. Your rate, I wouldn't say now it's necessarily higher. I mean, it was pretty similar to non-owner occupied stuff if you were going to get one that's from a Fannie or Freddie type loan. Usually in the past, commercial rates have been a little higher, but I think they're kind of on par now. I would just say, when you're getting in that field, go and talk to a handful of commercial agents and see what they can give you that makes sense for you, because there are things out there where they can get you loans for FF&E, your equipment, for something they can get you money for a build out, like a purchase and construction. There's some specialty type products, but until you go and talk to the actual lenders, you don't really know what you can get, I would say.
To your point, I'm not a banker. I've told many bankers how to do their jobs, though, so I think I can speak somewhat intelligently on that. And I say that, I've told bankers how to do their jobs.
I know.
In a simplified version, all I'm gonna say is this, that it's very different. Like you said, you're gonna have amortization with definitely balloon payments, 3, 5, 7, 10 years. You're gonna run LTVs versus DSRs. For a little while there, we were talking about debt yield. Debt yield never came into the picture very heavily, but they're gonna run that lower the amount. Obviously, investment versus owner occupied, very different. The biggest thing I would say with lenders, and it's something that actually he's not in this room, but if If everybody knows Caleb Fritzler at all, good friend, great guy. He spoke at an event a few years back, and he saw something that really resonated with me. And he said, just realize, and he was actually a banker by trade who became an investor. And he always said, he goes, remember that not all banks are created equal. And so the first question I ask any banker whenever I sit down with them is, what's your lending capacity? Because a small bank's lending capacity might only be 1 to 3 million, where you go to Wells Fargo, their lending capacity is 80 million. But who here wants to do a deal with Wells Fargo for a freaking house flip or a fourplex? Like, good Lord, that just sounds like a ton of problems. The first question I'm gonna ask really as you interview any lender is, what's their lending capacity? And then also, what are they most likely to lend on? Because again, most banks like certain asset classes better than others. Some banks love multifamily. Some banks love industrial. They're all different. Credit unions, again, very different. So it really depends. The biggest thing I also say as well is that in residential, every loan is pretty much sold off to the government, to some third-party market. In commercial, these banks physically hold these notes. That's how they make their profit. Banks make fees on residential. They make their actual money on commercial. That's the biggest difference between commercial and residential, is that they actually hold these notes, and that bank will actually still be the one servicing your note in 3 years, 5 years, 6 years, 7 years. And from my own experience, I can say this. One of the mistakes I made early on was chasing the rate. I used to always chase the rate. Whatever bank gave me the best rate, that's what I went with. In retrospect, there have been times when my banker has told me, don't do this, and it was like, they were right. I shouldn't have done that, because they were trying to protect me. Because at the end of the day, the bank does not want to take that property back. If you're talking to bankers, my encouragement is figure out who you like, who you trust, understand the bank, and also understand that you might at some point, depending on what your goals and ambitions are, may actually outgrow that bank. I've got some clients who have outgrown their banks and had to find new relationships because their bank can no longer service their level of lending capacity. Hopefully that's helpful.
I would add also that they have different pools, like they lend for industrial a certain amount of dollars, and for medical office a certain amount of dollars. So you can ask them what's their appetite.
Adam over there said, like, ask them what their appetite is for multifamily, for medical, for industrial, for storage. You have to ask a lot of questions. Ask who the decision maker is on the loan. A loan committee, right? When do they meet? Do they meet every Tuesday? Do they meet every other Tuesday? Do they meet once a month? Is it under this price point, the lender makes the decision? Very possible.
Have also they don't need to go to committee after a certain amount of dollars.
Yeah, so that's, like what dollar amount triggers the loan committee?
The individual lending capacity for the bank for individual.
To generalize this, so those of you that didn't hear, ask a lot of questions and try to figure out how you can determine the answer that they will tell you when you ask them the question. In my mind, I always look like, if I was an attorney, which I'm not, but they always say, you want to know the answer to the question before you ask it. When you're talking to the banks, love banks because they lend us money, know the answer before you ask it. Or at least ask enough questions to know the answer that they're giving you, how they determined it. Good?
Yeah.
Enough?
Yeah, we can go a lot.
We could dig into banking. We're not getting into banking. Okay, so we're way over the Q&A. But any other questions? Because this is way good. Riley, go ahead.
What are some of the most valuable things that a commercial agent can do to help a buyer during the buying process?
Most valuable things that a commercial agent can do during the buyer's process.
Depending on the property type, there are going to be intricacies maybe of the market or things that are going on that a buyer may or may not know. There are plenty of folks in here that are up to speed. There are also investors out there who maybe they're a foot doctor and they're just looking to get a return and they're not staying up to date. Let's say you're looking at multifamily and you're in Des Moines and you want to know about the rental certs, what that process might be like. Or maybe if I know one of the things that came up recently on the Facebook page was the rental cert lapsed and then it's not zoned correctly. So you have something like that. Or if the city of Des Moines, they're hitting on shared air. So right, yeah. So I guess
let's keep it positive.
We could stay on the city of Des Moines for a while, but stuff like that. There are intricacies. Or if hey, this type of building you can stack this high until you need a certain type of fire suppression system, or you need firewalls at this amount of space, or if you're going to do this, you need a grease interceptor, or technically your state license says you can do this, but not that, there are a lot of ins and outs, but then also what's happened with recent properties. Most brokerages have weekly meetings, if not, doing it more on your own, where you're going through everything that has sold on the market, what price it sold for, who bought it. Maybe you can see that there's certain companies making larger moves in an area development-wise. Let's say you're looking for multifamily and you just found out that Waukees building Target with a big development around it and they're almost done with the Live Nation set. There's just overall market conditions that I think brokers would be able to help you with, but then also some intricacies. Maybe if somebody hasn't dealt with septic before, you're gonna have to get that inspected before it goes through, and underground tanks, stuff. If you have to get a phase 1 environmental study, now I'm not gonna do it, but if you get something back that's scary on it, I can tell you like, hey, this is not good. This is a toxic waste site that the city wants to, build a police station on. Now it's a soccer stadium, I think, but it's been cleaned up. But that sort of stuff.
Cleaned up.
I don't know, Jared, what do you?
At the end of the day, you've hit on a ton, honestly, Dan, and there's so many. I watch city council minutes, planning and zoning minutes as well, like kind of as your point. But what I would say is commercial real estate is even though it's more of the Wild Wild West, it is treated more like the law. In the law, if I'm being charged with a criminal case, I'm charged for murder, I want a professional on my side. If I'm having a civil case where it's like just a lawsuit, okay, no big deal. I always relate real estate to the law. In civil, it's residential. You can get a slap on the wrist, you can have some fines, whatever it is. Commercial, you're dealing with a lot bigger consequences. And so what I mean by that is if I am charged for murder tomorrow, I'm not going to call my real estate attorney up and be like, I need you to defend me in the court of law for first degree murder. He's gonna be like, great, I do deeds all day long in freaking HUDs. I can't help you. And I'm like, okay, great, who do you know? He's like, well, I know this guy who just got out of law school, he can help you. And I'm gonna be like, that, I want the best. I want the Kardashian lawyer who got O.J. Simpson off. I want the best guy in the world to get me with this white glove. So what I mean by this, again, I say this jokingly, but commercial real estate is all about, in my experience, actually giving a kudos to Dan, because his broker, Kevin Crowley, has been in the business 45 years?
Forever.
40 years, I don't know, like long time. And I will tell Kevin this, and me and Kevin have had cigars, we've talked about this before, I'm like, that man has forgotten more about commercial real estate than I have known in 15 years. And he's been in this 40 years, like that guy's going to literally walk into a building like this and go, do that, forget this, that's the problem here, do this over there, that's gonna happen over there. And I'm gonna be like, Kevin, what the hell did you just see that I didn't? He's like, well, it's called 4 years experience. I shouldn't say me on Crowder, but like, I talked to Kevin and Richard about your lease there, the Realty lease that was done, and they said, it was two guys who got together and said, we're doing this lease, we're gonna figure it out, and they pulled it all together in like a weekend or something. It was a crazy story. But to answer your question, the value of a commercial real estate agent, in my opinion, is the experience, because we are so wild, wild west. So the question, back to Darson's earlier answer, is do you want a gunfighter who's been in a gunfight before? Or do you want someone who's like, yeah, I started this off one day and I kind of thought I might figure out how a 6-shooter works. Residential isn't as big of a deal because it's so regulated. Because the residential works with the consumer all day long and the government wants to protect the consumer. So residential, you can't make mistakes. I can say confidently here, and maybe Dan can too, I've seen $100,000 mistakes made on sometimes a daily basis in commercial real estate all day long. And it really sucks when you're going to your buyer or your tenant or even your landlord or your seller and going, hey, I'm sorry, we're about $100,000 difference and I need to pony up some money. I hope that helps answer your question, but it's really experience. And then Dan mentioned like the plethora of different things that can go wrong or worth thinking about.
Tony, go ahead.
So this is more of like thinking about the market and like a shift question for Des Moines. Everybody knows it's a giant insurance company area. Is there any transition thought to all of this office space?
The question was, office space, what the hell are we gonna do with it all?
There have been some developers that have looked into converting it to something else, maybe multifamily. Most buildings, it just financially isn't feasible at this point, and until it hurts bad enough where there's enough government money to make it make sense, we're gonna be where we're at.
I was on a panel a week and a half ago, 2 weeks ago. Darson, you were there. I think Dan, you had a soccer game for one of your, I think, sons or daughters, so you couldn't make it. But again, not to keep tying back to Kevin, but Kevin Crowley, his broker, was on a panel where this question was asked. What's gonna happen with downtown office space? And this was Kevin Crowley, Richard Hurd, two of the big commercial real estate gurus in our market, and they flat out said, we don't fucking know, basically. And to Dan's point, unless the pain gets so bad that the city and the private, it's called a PPP, public-private partnership, get together to figure it out, we're not going to have the answer. It's going to take a mixture of the public-private partnership, but right now there has not been enough pain in the market for both the public and the private to come together and be like, what the f do we do? So now that helps answer that.
And it's not that they haven't tried to do the multifamily thing. Like, there's a lot of infrastructure changes that buildings have to take to do multifamily out of an office building. So like, there's obnoxiously smart people that are trying to look at this to see where the opportunity is. It's not there. Like, it's just not there. So like, those of you that are like, oh, I'll just, maybe I'll wedge myself into there. I don't recommend it. At least focus on your efforts. So, okay, we'll wrap it up. Sebastian says, camera's gonna die. We'll wrap it up. If you see someone here that you're like, hey, I wanna go meet them, I wanna go talk to them, they had a good question, go do that. I think that'd be fantastic. It's why I put these meetings together. One thing I want to mention, Ryan Wickstrom, Home Life Brothers, somewhere around here. He's in the way back, literally the farthest back. If you guys need any construction, any work done, give him a call. He'll give you a quote. He's one of them that puts this meeting together with me. I didn't mention him at the beginning, so thought I'd put it together at the end. So. What? Yeah, sounds like you. Thanks. Okay. Thanks for coming, everybody. See you next month.